Yeah, good afternoon. Welcome all GST lovers to this yet another Master Blaster webinar of GST and IDT committee. We, under the chairmanship of RK sir, doing fantastic work in GST. His vision, his dedication has lead this committee to the greater heights. And today, this series of webinar is focusing on invoicing, debit notes, credit notes, and most important, the practical issues. Friends, when we are in practice, many times the new registration or the taxpayer or accounting people comes to us, sir, which documents we have to prepare, how we have to prepare, what stand will the department take, and many issues are there, suppliers, then recipient and ITC and whatnot, and penalties. Many things are there. So we have a very eminent faculty from Calicut, Rishabh Parikh. Parikh ki kitni तारीफ करे. So lot of things we will learn from him. But before that, friends, it is our endeavor to listen to our chairman who is moving across all the sections of our India, all the regions of ICI, and also meeting many GST departmental persons. So let's have a detailed discussion with Sir regarding his vision, regarding his thought process for taking the GST and IDT committee to the new heights. Things we Over to you, RK sir.
Thank you, my dear Umesh, the vice chairman of our committee and the most dynamic chairman of the Artificial Intelligence Committee of ICI, the AI in ICI. In fact, I am little unhappy with you. The reason is you are spending 90% of your time in AI in ICI committee and only 10% you are spending for us. What you used to spend in the previous years, you're not spending now. But nevertheless, I'm glad that you're spending time for ICI committee only. Okay, we have our own grievances, what we can do. But then this is a new committee which you have taken it to great heights. It is not that I pat your back, you pat your back, I am telling. It is actually the fact, and statistics prove that the AI committee has done a great work and very significant work across the country. In fact, even in GST also, in fact, we know the kind of work you do, the kind of writings you write for the kind of journals you appear, your columns appear, and basically your GST along with the Bhagavad Gita is excellent, and you today hold a record for record number of articles in any newspaper in India.
Thank you, sir.
Yes, sir. And in fact, esteemed viewers, see, the GST committee is there everywhere today. Let me tell you. I am not telling this just because of the sake of telling, but we are there everywhere. Whether it is state government, central government, CBIC, GSTN, or the GST Council, all these stakeholders, every stakeholder, the GST committee is there. Our presence is there in every state in India. We are continuously, I can say, bothered. Bothered may not be the right word, but I'm using only this word now. By the government to conduct numerous training programs for the officers of GST. Because sometimes our members take a little saying that, sir, what is this, sir? You are teaching so much to the department people. They learn from us and they come back to us, to our clients. But then you see, the Institute of Chartered Accountants of India is a statutory body established by an act of parliament. Our duty is also to the government who gave us birth. We can be facilitators, but at the end of the day, we are also regulators of this profession. We in the GST committee facilitate our members by conducting these type of programs, certificate courses, courses on litigation management, and above all, the publications. Our publications are one of the best in the country, and I can proudly say that our publications are referred by who's who in this country today. And people like Rishabh Parikh, they're all, I can say, find of our committee. There are many find of our committee, I can say. Today, there are many speakers whom I can name, go on, sir. These are the people who were founded by the GST and Indirect Taxes Committee. One such find today is Rishabh Parikh, who hails from Kerala, God's own country. He was born in Kerala. He speaks Gujarati as his mother tongue, and a person who is academician also, a person who teaches, a person who learns GST. Rishabhji, thank you very much for giving us the time to host you, and thank you very much for the opportunity that you given to the committee to showcase your talents. In fact, invoice, debit note, credit notes. In fact, if this is not there, there is no GST. If you don't raise invoice, where's the question of the GST collection at all? It is not there. An invoice is actually cash in hand. For an input credit, the input invoices are actually cash in hand with the person with the output provider. So it is something very 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 sacrosanct. And debit notes, credit notes are those documents which also have an impact on the GST collections, on the GST levy. So today we are going to hear from Rishabh about all these topics, about how and where the issues may arise and how we can resolve. In fact, this is what these sessions, friends, what we do is we ensure that as far as possible the questions are answered, as far as possible the practical views of the various speakers across the country are delivered to you. You'll find our speakers are spread far and wide. There are many, many, many speakers who are also going to join in the coming months also. And I'm confident that your support will help us in showcasing our talents, in working for the ICAI, in facilitating you at all times in GST. Wherever you have a problem, friends, just go to your email, say at ICI.in, and say, sir, I have this problem. What I can do? We will tell you, you will get an answer from us. You will get three answers. Yes, we can help you. No, we cannot help you. Let's see whether we can help you. These three things I can tell you. So kindly and also flag us the issues so that we can take it to the who's in the government. As we're connected to various government authorities, sunte hain hamari. They do hear us. Let me tell you this. They do hear us with the open eyes and open ears. See, issue may not be resolved sometimes. Sometimes the answer may be no. But then at least there's someone who is there to hear you, who was not there in the past. So thank you very much. Welcome, Rishabh, and thank you, Umesh. Let us go through the session. Thank you.
Yes, thank you, RK sir. Your chairmanship has shown us very new things in GST as well as learning for all the stakeholders, members, and our all the state government across India. So we will continue that. So let's listen now to our learned speaker, Rishabh Parikh, who is from Calicut, Kerala. He is a fellow chartered accountant having vast knowledge of GST. He has been contributing to the various seminars and webinars of ICAI, and he is one of the finest speaker of our committee. So over to you, Rishabh bhai.
Thank you very much, RK sir, Chairman, Honorable Vice Chairman, Umesh sir. Thank you very, very much for providing me this opportunity. It feels like uh, I'm continuously learning GST only because of GST committee. I have been provided various opportunities thanks to both the eminent people who have always seen as my role models and the books of GST, as RK sir said, are the excellent material which I always refer. There is no substitute to that book. All the handbooks, all the background materials, each and every answer we normally get from the reading of our background material and the handbooks. So even my today's presentation, whatever I have prepared, is all because of our background material and the handbook on the invoicing, which is prepared by our GST and indirect tax committee. So I again thank. There's no words which can thank or which can explain my gratitude towards the committee and towards the chairman and vice chairman for providing me this opportunity. So I'll start my session with sharing my slide. I hope the slide is visible. Okay, sir.
Yes, sir.
So first things first, we are going to start with our topic, that is invoicing, debit note and credit note. We'll be recalling various sections and various circulars and notifications which have been issued time and again by the department. So starting with first basic thing of what is invoice. Okay, invoice is a normal document which evidences supply, whether the transaction is under forward charge, whether the transaction is under reverse charge. It is a document which allows the government to provide input tax credit to the recipients, and it acts as a proof. So if I say in one line, invoice can be treated as a combination or a result of various sections of our GST Act. Only if a transaction is a goods or service shall invoice be raised. Only if a transaction is a supply, invoice will be raised. Only if a transaction is a subset of all these combinations, an invoice is raised. So obviously, GST is a document-based regime. Every transaction in GST needs to be supported with some document. Either it may be an invoice, it may be a bill of supply, it may be a receipt voucher, it may be a refund voucher, it may be a payment voucher, new self-generated invoices, revised tax invoices. Various documents are available in our section 31 of CGST Act. Non-generation of invoice can lead to a lot of issues for both the supplier as well as the recipient, leading to prosecution and penalty under section 122 and 132 of our CGST Act. So let's understand what are the time limits within which a supplier is normally expected to issue invoice. Let's start with a basic condition. Time of taxable supply in case of goods, if it involves movement. So if Mr. A is selling goods to Mr. B, and it is the goods are moving from one place to another, the invoice is required to be issued by the supplier at the time of removal of goods from supplier's place of business. What do we mean by the word removal? Removal refers to to section 96, which helps us to understand what is removal. Removal refers to movement of goods from one place to another, and if the supplier is dispatching the goods or the recipient is collecting the goods. If supplier is liable to send the goods to the recipient, that is also treated as removal, as well as if the recipient is required to come and collect the goods from supplier's place of business, also called as the ex-factory contract, that shall also be treated as removal of goods. One very, very important circular which was issued by the department on 31st December 2024, numbering 241/35/2024. I'll repeat the circular number. It's a very important circular number. 241/35/2024, which explains, normally we know that recipient can claim input tax credit on a transaction only if he has received the goods or services or both, as per section 16, subsection 2, clause B. Repeating the same, the recipient is eligible to claim ITC only when he has received the goods or services or both. We all know that. When can goods be treated as received for the recipient? In case of an ex-factory contract. In case of ex-factory contract, the property passes to the recipient at the removal of goods from supplier's place of business. So let us assume Mr. A is selling goods to Mr. B on ex-factory basis. So Mr. B is responsible to come and collect the goods from Mr. A's place of business. If goods are removed in the month of July, let us take on July 25th, goods were removed from supplier's place of business on ex-factory basis. And it actually reaches the recipient's place of business only in the month of August. Still, we are eligible to claim ITC in the month of July itself, if it is an ex-factory contract. Because at the time of removal of goods from supplier's place of business, that will be treated as goods received by the recipient only in case of ex-factory contract. So this circular number 241 bar 35 bar 2024 is explaining this treatment. It's a very helpful circular. It is beneficial for the recipient that he doesn't have to wait for 1 month to claim input tax credit on such transactions. Second case, if the goods are not involving movement. For example, if a building is sold along with the pre-installed furniture, we know that the pre-installed furniture shall be treated as goods and liable to GST. Now the question arises, when will the invoice be required to be issued by the supplier because there is no movement of goods? So section 31 explains that in case of goods not involving movement, the invoice is required to be issued at the time of delivery of goods. Now, what do we mean by the word delivery? In GST, according to my knowledge, there is no definition of the word delivery. So therefore, we use the word or we use the definition as given in Sale of Goods Act, interpreting the same definition from Sale of Goods Act. So delivery refers to voluntary transfer of the possession. It may be constructive in nature or it may be a symbolic delivery. So at the time of delivery, we are required to issue invoice. Next, in case of goods which are sold or which are sold only when the goods are accepted by the recipient, that is also called a sale on return basis or sale on approval basis. So goods are removed from the supplier's place of business, but the supply has not taken place because the recipient has not accepted the goods as such. So when can we raise the invoice? Only when it is treated as a supply. So when is the supply treated? When the recipient accepts the goods, the ownership of the goods, or in case there is no response from the recipient side, at the end of 6 months from removal from supplier's place of business, we are required to issue the invoice. Now, practical, we have some difficulties here. We know that in case of textile sectors, normally, the goods are sent by the manufacturer to the wholesaler on approval basis. And he has time limit of 8 months, 10 months, which is agreed upon both by the supplier and the recipient to accept or reject the goods. But as per GST Act, once 6 months are over from the supplier's place of removal from supplier's place of business, we are required to issue invoice. So therefore, even though the supplier and recipient may have agreed a higher time limit than 6 months for accepting or rejecting the goods, but as per GST, at the end of 6th month, we are required to issue invoice, whether or not the recipient has accepted the same. So if goods are accepted within 6 months, we are required to issue invoice at the date of acceptance. If goods are rejected and sent back to the supplier within 6 months, then there is no requirement to issue invoice. Delivery challan will suffice. If the goods are accepted after 6 months, at the end of 6 months, we are required to issue invoice as per GST Act. And if there is no acceptance or rejection, automatically at the end of 6 months, we are deemed liable to generate invoice. In case of services, we know that we have a time limit of 30 days from the supply of services, completion of services, or provision of services, whatever we may call it. However, in case of bank, where the supplier is a banking company, NBFC, financial institution, or insurance company, we have a time limit of 45 days from the date of completion of services. Moving to the next point, which is talking about continuous supply of goods. We know that continuous supply of goods, the removal happens at a continuous or a frequent basis or recurrent basis. So practically, it is not possible for us to issue invoice at the time of removal of goods. So for that purpose, the section 31 provides us that at the time of each successive statement being issued or when the each successive payment is being received, we can issue the invoice. What may be the examples of continuous supply of goods? Water cans being supplied to the company or being supplied to our office on regular basis. Every 3 days, every 4 days, they come and replace the water cans. The removal is happening every 3 or 4 days. It is happening on recurrent basis, but we are not able to generate invoice on every removal. So at the time of each successive statement being issued or each successive payment being received, we are required to generate invoice. Another example which we may take for continuous supply of goods is in case of supply of bricks, supply of river sand for the builders. So we are regularly, every 2 days, 3 days, we are supplying bricks to the builders on continuous basis. And the statement of goods is being issued either weekly or either monthly or either on every 15 days. So at that time, we are required to generate invoice and not at the time of removal of each goods. We may note that in case of continuous supply of goods, there is no minimum time period prescribed in the Act. So if there is a contract, if it is continuously supplied, and if the invoicing is done on a regular basis, then it can be treated as continuous supply of goods. There is no minimum time limit prescribed. Whereas if we see the definition of continuous supply of services, there is a minimum period prescribed. It's a very important thing to note. A service can be treated as continuous supply of service only if it is provided for a continuous period of more than 3 months. We can take an example of renting services. We can take example of security services. We can take various other examples where we are providing services for a period greater than 3 months. Now, how do we... Another example, very important example which you may take is of construction. The builder is providing services on a continuous basis, but billing is happening only on recurrent basis. So how do we generate invoice, or when are we required to generate invoice in case of continuous supply of services? The first sub case is talking about where due date of payment is ascertainable from the contract. The contract between the supplier and recipient has fixed the date of payments. For example, I am providing security services to one of the clients, and I have asked the clients to pay on every 10th of next month. So if there is in the contract a fixed date of payment is fixed, we as a supplier are required to issue invoice on or before such due date of payment. So if due date is fixed, we are required to issue invoice on or before such due date. But if due date of payment is not fixed, example, in a rent agreement, I have provided that rent should be paid by the recipient of service on monthly basis. I have not fixed any specific date. In that case, when am I required to issue invoice? So section 31 provides that I am required to issue invoice at the time of receipt of payment or before receipt of payment. So if I'm issuing the invoice, obviously I'm going to get the payment, or if I'm receiving the payment first, I'm required to issue invoice at the time of receipt of payment. And in case of construction, where payment is linked to completion of an event, if the payment is linked to completion of an event, we are required to issue invoice at the time of completion of such event or before such completion of that event. So example, in a contract, we say that advance is to be paid at 10% of the total amount. At the completion of first floor, you are required to pay me 10%. At the time of completion of second floor, you are required to pay me another 30%. So here payment is linked to completion of an event. So if that event happens, you are required to pay. So therefore, invoice is also required to be issued at the time of such completion or before such completion. Another circular which was issued by CBIC, numbering 221/15/2024, which is actually for hybrid annuity model contracts. We know that construction contracts having more than 3 months time period are coming under the definition of continuous supply of services. So nowadays, we know that during the construction of a road or a highway, the construction contract as well as the operation and maintenance contract is provided to a contractor by the government. Repeating the same, the government is providing contract to a contractor for construction of the road as well as maintenance of the road for 15-17 years. Now, since this contract is spread over a period of 15-17 years, which is more than 3 months, it will come under the definition of continuous supply of services. So how do we issue invoice in case of construction contracts having more than time period of 3 months? As we discussed in the earlier slide, since construction is treated as continuous supply of services, we are required to issue invoice based on completion of an event. And if the government has specified that in each year so many payment is made or some amount will be due, so at that time the contractor is required to generate invoice. So I would like my respected members to note this circular number and please do go through it. And this same concept can be applied in any case of continuous supply of services which have more than 3 months time limit. This circular will be very helpful for the members. I'm repeating the circular number 221/15/2024. Hybrid annuity model contracts. Next topic, what we are going to discuss is about cessation of a contract. If we have entered into a contract, let us assume we have a AMC, annual maintenance contract of 12 months or 15 months or 2 years. And we have entered into the contract, but before the contract expires, due to some reason, we had to cease the contract. We had to stop the contract due to some issue from the supplier side or the recipient side. In such case, how will invoice be issued? And when will the invoice be issued? Section 31 explains that at the time of cessation, we are required to issue invoice to the extent of value of services or goods which are provided before such cessation. Example, the contract was for 2 years at a monthly payment of 1,000 rupees for the maintenance services. and after 6 months, we have to cease the contract. So we will be liable to issue invoice at the end of 6th month for the services provided before such cessation for the 6 months. So at 6,000 rupees, we'll be liable to generate the contract and not at the full value. Only to the extent of services which were provided before such cessation. Coming to the next case, which is talking about services provided by bank, NBFC, financial institution, insurance companies, or telecom operators to its own distinct person, which is having obviously different GST number. So we know that distinct person under section 25 are persons who are having same PAN but having different GST numbers. Now, how will invoice be issued, or at what time limit are we required to issue invoice? Section 31, read with Rule 47, provides that in case these people are providing services to its distinct person, they are required to issue invoice when the supplier of services records the same in his books of accounts or before the expiry of the quarter in which such services were provided. So let us take an example to understand this better. I've provided an example here. BSNL, which is a telecom operator in Telangana state, provides services to its distinct person located in Tamil Nadu for the SMS services provided in Tamil Nadu. Since they are distinct persons, BSNL Telangana can issue the invoice when it records the same in its books of accounts or maximum by the end of the quarter in which such services were provided. One very important thing which we should note here is that this provision applies only to these limited suppliers and not to normal suppliers. So if we are providing services to our distinct person, this provision is not applicable. This is applicable only to banks, NBFCs, financial institutions, and telecom operators. Next one, we are going to discuss a very important rule, Rule 46. What are the contents of an invoice? We all know that as per section 16, subsection 2, clause A, read with Rule 36, sub-rule 1, a person is eligible to avail ITC only if he is in possession of tax invoice or any other prescribed and notified documents, which includes debit note, which includes bill of entry, which includes self-generated invoice, etc. But what if the invoice does not contain all the details which are required to be provided in Rule 46? Will ITC be allowed, or will ITC be restricted, or will ITC be disallowed? So explanation to this is provided in Rule 36, sub-rule 2, which says that there should be minimum certain details inside an invoice which will help the recipient to avail ITC. So if these minimum 6 details are not available in the tax invoice, he may be disallowed from availing input tax credit. What are those 6 details? First one is GST number of supplier, GST number of recipient, description of goods or services, value of supply, tax amount charged, and place of supply if it is a interstate supply. So place of supply becomes compulsory in an invoice if it is an interstate transaction. So if any one of these is missing in the invoice, the department can easily restrict people from availing input tax credit. So even though Rule 46 has various other items which are to be there in the invoice, as per Rule 36, sub-rule 2, minimum 6 details should be there in an invoice to avail input tax credit. So what are the other details which are required to be there in the invoice? Let us go through the slide. the invoice number, which can be in any format. There is no specific format. It should be maximum a 16-digit number. You can use special characters. Name of the recipient, that is an important point. Name, address, GST number if he is registered. Now, what about B2C transactions? This is an important area. In case of B2C transactions, is name, address of the recipient and address of delivery compulsory or not compulsory? This is a very much relevant topic nowadays, especially after a new amendment has come recently. If the value of supply is up to 50,000, then it is optional on the side of supplier to put the details of the recipient who is unregistered. However, if the unregistered recipient requests his details to be put in, obviously the supplier has to do so. But what is the amendment? In case of supplies of services through electronic commerce operator, ECO, supplies of OIDAR services, online information database access and retrieval services. Also, in case of online money gaming services, in these three situations, even if the transaction is a B2C transaction, name and address of the recipient, maybe the state code might be enough, but it is compulsory. So the value of supply being 50,000 or less or more doesn't apply in case of ECO transactions, in case of online money gaming transactions, and in case of OIDAR services. So these points need to be noted. State of the recipient, even if he's unregistered, even if the value is less than 50,000, needs to be provided in a B2C transaction. HSN code, SAC code we'll be discussing in the next slide. Description of goods or service is a very important area. Clear description of goods or services should be provided so that the department can understand whether such ITC is allowed or not allowed based on section 17.5 block credit. Quantity in case of goods, value of supply. Now the question is value of supply and tax amount should be showed separately? Is it necessary or is it possible that we can show the total value? As per section 33. Section 33 of CGST Act requires us that value of supply and GST amount needs to be separately shown in the invoice and in all other documents, including returns. So we cannot show inclusive value. We are required to show value of goods separately and tax amount separately. If the transaction is chargeable under RCM and the supplier is a registered person, the supplier shall continue to issue invoice and he has to state specifically in the invoice that it is a transaction taxable under reverse charge. Repeating, if a transaction is under reverse charge, supplier is registered, he shall continue to issue invoice and he should specifically state in the invoice that the transaction is taxable under reverse charge basis. Because we know that in case of GTA, if he has opted for 12% or if the author has opted to pay tax under forward charge, if the supplier of sponsorship services is a body corporate, etc., in various other cases, the supplier, even if the transaction is coming under RCM, since suppliers are registered, they are liable to issue invoice and collect tax and pay if it is under forward charge. And in case they are not registered and transaction is coming under reverse charge, they are required to tell that to the recipient so that the recipient can take necessary steps. So repeating the same, if the supplier is registered, recipient is registered, transaction is under RCM, supplier shall issue invoice stating that it is taxable under RCM and report the same. And if the supplier is unregistered, recipient is registered, he shall self-generate the invoice. We'll discuss that in the upcoming slides also. HSN code, I hope everyone is aware of this, but just brushing up. As per the above notification 78/2070, if a person whose previous year annual turnover is up to 5 crore, he is required to issue invoice for B2B supplies with 4 HSN digits minimum. In case of B2C, also 4, but it is not compulsory, it is an optional thing. However, if the turnover exceeds 5 crore, then even if it is a B2B supply, even if it is a B2C supply, he is required to present 6 digits of HSN code mandatory. So we all know that e-invoicing is a concept which is applicable to person whose turnover exceeds 5 crore. So therefore, in case of e-invoicing, 6 digits become mandatory. Coming to the next rule, Rule 48, which is talking about manner of issuing invoice. In case e-invoicing is not applicable, the supplier of goods is required to issue invoice in 3 copies in triplicate, being original for the recipient, duplicate for the transporter, and the triplicate copy for the supplier. In case of services, invoice where e-invoicing is not applicable is to be issued in duplicate, original for the recipient and duplicate for the supplier. The serial numbers of the invoices are required to be reported in GSTR1 table number 13. Not only invoice, now onwards we are required to compulsorily show all the document numbers, whether it is receipt voucher, whether it is refund voucher, whether it is self-generated invoice, we are required to present, or we are required to fill the table number 13, where we are required to show the numbers of invoices or any other document issued. However, it is clearly stated in Rule 48 that if e-invoicing is applicable to a person, then he is not required to issue invoices in triplicate or duplicate. Only the e-invoice in 1 copy may be sufficient. So the question arises that during the movement of goods from one place to another, is invoice to be provided or invoice copies to be provided to the person in charge of the conveyance? The answer is no, it is not required. However, the IRN number or the QR code shall suffice. So therefore, a separate physical copy in the hands of person in charge is not required. It is clarified by way of a notification by a circular, which we'll be discussing in the upcoming slides. I'll repeat that point there. Another important concept, very important concept, is regarding e-invoice. We know that e-invoicing is applicable to all registered persons whose turnover exceeds 5 crore in any previous financial year starting 17-18 onwards. Repeating, any registered person whose turnover exceeds 5 crore in any preceding financial year, starting 17-18 onwards, is required to generate invoicing. So what happens is, till now, from 17-18 onwards, till previous year, our turnover was not exceeding 5 crore. But what happens if my turnover exceeds 5 crore in the current financial year? Are we required to generate invoice from this year onwards or from next year onwards? Strictly speaking, as per law, we will be liable to generate invoicing only from the next financial year. But there are certain issues practically where we are sent SMSs or sent notices by the department asking us to generate e-invoice in the current financial year. But as per law, we will be required to generate e-invoice only if our previous year turnover from 17-18 onwards in any financial year exceeds 5 crore. So strictly speaking, from next year only, we will be liable to generate e-invoice. However, in certain cases, certain persons are exempted from generating e-invoice even if their turnover exceeds 5 crore. There are a category of 6 people who are exempted from generating e-invoice even if their turnover exceeds 5 crore. Let us discuss one by one. The first one is SEZ unit. We have to be very, very careful here to understand that only SEZ units are exempted from generating e-invoice. SEZ developers are not exempted from generating e-invoice. So what happens if SEZ developers turnover exceeds 5 crore? They are liable to generate e-invoice. The second person coming in this category is an insurance company, banking company, financial institution, NBFC. These people, obviously, their turnover exceeds 5 crore, but still are exempted from generating invoice. GTA, which is supplying services of transportation of goods by road in a goods carriage, is again not required to generate e-invoice even if their turnover exceeds 5 crore. However, they have to follow Rule 54, where Rule 54 asks them to issue consignment note with certain minimum details inside the consignment note. They are liable to follow that rule, but exempted from generating invoice. Coming to the next one, supplier of passenger transport services, like we have aircrafts, we have airline companies, we have Indian Railways, who are providing services of transportation of passengers. Their turnover, even if exceeding 5 crore, are not required to generate invoice. However, again, same as GTA, they are required to follow Rule 54. Special details should be there inside the ticket issued by the passenger transport service provider. Another case, which is talking about persons who are supplying services of admission to cinematographic films in multiplex screens. So it is a very specific one for multiplex screens. Single screen theaters are not included here. So if it is a multiplex screen, they are exempted from generating e-invoice. But however, as per Rule 54, again, they are required to generate e-tickets, electronic tickets. And any government department or local authority, whether involved in business or not involved in business, or registered only for the purpose of TDS, still they are exempted from generating e-invoice. Okay, so a question arises practically. Let us assume there is a company called A Limited, which is having 2 branches, one in a domestic tariff area, one in a SEZ area. Turnover of both the branches are 3 crore each, totaling to 6 crore in the previous year. Turnover of DTA, turnover of SEZ, both are 3 crore in the previous year, totaling to 6 crore. The question is, am I required or is A Limited required to generate e-invoice? The answer is yes. Aggregate turnover shall include the turnover of SEZ unit also. So thereby, when totaling the aggregate turnover, it shall be 6 crore, which is more than 5 crore. And thereby A Limited shall be required to generate e-invoices for transactions which happened from the domestic tariff area. Whatever transactions are happening from the SEZ zone or SEZ unit are not required to generate e-invoice. So for the calculation of aggregate turnover, whether e-invoicing is applicable to me or not, to decide that I have to take aggregate turnover, and aggregate turnover is PAN based. And obviously, SEZ turnover shall also be included in determining whether it crosses 5 crore or not. And once 5 crore has exceeded, the company as a whole shall be liable to generate invoicing. However, since SEZ units are specifically exempted, only for such transactions we need not generate invoice. So for the rest of the branches, rest of the transactions, we shall be liable to generate invoice. Another doubt which normally arises in the practical scenario is whether only notified transactions are exempted or the entire entity is exempted. Let us assume multiplex screens. It is a very good question which I in the last week when I was taking a session, I got to know about a question like this. It was a very interesting question. Let us assume there is a cinema theater. It is a multiplex screen. It is also providing renting services inside that cinema theater premises. Some portion of the cinema theater is rented out. Now, this is renting services. Now, the question is, are cinema tickets only exempted from invoicing, or the cinema theater as a whole is exempted from generating invoices? Another example which we may take, for example, there is a bank providing banking services is exempted from generating invoice. But what if bank is selling certain goods, for example, gold or bullions? Are they only exempted from invoicing for services, or the bank as a whole is exempted from invoicing? So for clarifying this, the CBIC had issued a circular. This is a very important circular. Members may kindly note down the circular number 186 bar 18 bar 2022. The circular will be very helpful in case you are receiving any notices of non-generation of e-invoice, even though your client is being in the exempted category. This circular will be a very helpful one. 186 bar 18 bar 2022, which explains that the entity as a whole is exempted from generating invoice. So SEZ, bank, NBFC, financial institution, GTA, passenger transport service, multiplex cinema screens, government departments, local authorities are exempted as a whole. And it is not transaction based. So even if their turnover is more than 5 crore, irrespective of what type of transactions they do, they are exempted as a entity, as a whole, and not transaction based. So I would request the members to please go through with this circular number. Applicability of invoicing. Applicability of invoicing. We all know that in 2020, it was applicable to a person whose turnover exceeds 500 crore. But from 500 crore, it was brought to 100. From 100, it was brought to 50, 50 to 20, 10 to 5. So as of now, any person whose turnover exceeds 5 crore in any preceding financial year, 17-18 onwards, is liable to generate invoicing. I've provided various circular numbers here for your reference in case you need them. Coming to which type of transactions are liable to be e-invoiced. If my turnover exceeds 5 crore, as an entity, I'm liable to generate invoice. Yes. But is it applicable to all transactions? Answer is no. Only for B2B supplies, only for exports. Important point. Even for exports, we are required to generate invoice. And for transactions which come under reverse charge, if the supplier is registered, supplier's turnover exceeds 5 crore, even if the transaction comes under reverse charge, supplier needs to generate invoice. So only on these transactions, repeating the same. If it is a B2B supply, no doubt we have to generate invoice. If it is for export, we have to generate invoice. And if it is a 9 subsection 3 reverse charge transaction, provided that supplier should be a registered person and his turnover exceeds 5 crore. Even if transaction is under RCM, supplier will have to generate invoice. So automatically for B2C supplies, for invoices, ISD invoices, for 9 subsection 4 reverse charge supplies, in case of promoters, purchasing from unregistered persons, and in case of import of goods, import of services, we are not liable to generate invoicing, even if our turnover is more than 5 crore. So 3 cases, B2B, exports, and 9 subsection 3 reverse charge transactions, we are liable to generate invoice. Members may kindly note, this is what I was discussing earlier. If you are generating invoice, we are not liable to generate 3 copies or 2 copies, which was normally required under Rule 48. Invoice to be issued in triplicate, issued in duplicate, etc. That rule does not apply if you are generating e-invoice. So this is the circular number in case any vehicle is intercepted by the department and they are creating a issue saying that duplicate copy is not given in the hands of the transporter. We can use the circular number 160/16/2021 stating that in case of e-invoice, we are not required to carry the physical copy of tax invoice. Members may kindly note. Very helpful circular, especially in case of interception. Now the question is, we all know that there are certain government departments which are registered in GST only for deducting TDS and not involved in business activities. So in case I am supplying goods or services and my turnover is exceeding 5 crore and I'm giving such goods or services to a government department which is registered only for purpose of TDS, am I required to generate e-invoice or not? Repeating the question. I am the supplier. My turnover is more than 5 crores. I am supplying goods or services to a government department which is registered only in purpose of TDS, only for the purpose of TDS. Should we treat this transaction as B2B or should we treat this transaction as B2C? So clarification was issued stating that even if the government department is registered in GST only for the purpose of TDS, we have to treat them as a registered person in this case. Please mind, only in this case. There are other certain cases where opposite is assumed. We'll be discussing that also. So if the government department is registered only for purpose of TDS, still I have to treat them as registered person and I have to generate e-invoice when I am supplying goods or services to such government departments. I hope it is clear. Moving to the next one. Amendment and cancellation of e-invoice. Can we change e-invoice? Can we amend it? Can we cancel it? We all know that we are generating e-invoice through IRP, Invoice Registration Portal. So if we want to cancel an e-invoice, we can cancel e-invoice from IRP itself within 24 hours. However, there is no scope of amending e-invoice through IRP. So whatever changes you want to make in the e-invoice, you have to do the same through GSTR1 or GSTR1A or in the next GSTR1 as the case may be. So amendment of e-invoice cannot be done from IRP. We have to use GSTR1 or 1A or next one as the case may be. Cancellation can be done from IRP within 24 hours. Next, revised tax invoice. Rarely used, but let's understand what is this. Revised tax invoice does not mean that there was a mistake in the invoice and I'm issuing a revised version of the original invoice. It is not that. If there is a mistake in the invoice, we have to issue credit note or a debit note. But there is no revised invoice as such. So what does this revised tax invoice refer to? As per Rule 53, revised tax invoice is only for those people who are taking new registration. First timers. When we take a registration, within 30 days, when we apply for registration within 30 days of being liable, we are granted registration with effect from the date on which I became liable for registration. So therefore, there is a time gap between effective date of registration and grant of registration. Let us take an example. Assume on 1st August, I became liable to take registration. My turnover crossed the threshold limit of registration. 10 lakh, 20 lakh or 40 lakh, whichever is the case. I crossed the same on 1st August. I applied for registration under this category under section 22 within 30 days of being liable. Assume on 20th of August, I have applied for registration. And I was granted the GST number on 5th of September. Repeating. 1st August, date of being liable. 20 August, date of application. And 5th September, date of grant of GST number. So even though I'm getting a GST number on 5th September, it will be valid. It will be valid with effect from 1st August. So therefore, from 1st August onwards till 5th September, I was a registered person without having GST number. So I am granted registration number from a back date. So what will happen to the transactions which are being affected between 1st August and 5th September? We are required to issue revised tax invoice for those transactions which have occurred between 1st August and 5th September. We are required to do so within 30 days of, within 1 month of grant of registration. How will be the reporting done? As per section 40, in the first return, in the month of, after the end of month of September, in which you were granted registration, when you file normal first GSTR 1 and 3B, you can report the same as revised tax invoice. So therefore, the recipient shall be eligible to avail ITC even if it is a backdated transaction. There is no issue. But how to issue revised tax invoice? If it is a B2B supply, obviously we need to issue revised tax invoice separately. Invoice wise, we have to issue. But what if it was a B2C transaction? Are we required to issue revised tax invoice separately, one by one per transaction? Answer is no. We can issue a consolidated revised tax invoice. Only one rate wise and state wise it needs to be generated. It need not be generated recipient wise. Only in one case, we are required to issue it separately in case of unregistered persons. And that is where the value of supply under a transaction exceeds 2.5 lakh rupees. So if there is a B2C transaction where value of supply is exceeding 2.5 lakhs, we are required to issue revised tax invoice separately to that unregistered person also. And that is reporting also is to be done separately. In all other cases, issuing consolidated revised tax invoice will suffice. It should be rate-wise and state-wise, only for the purpose of place of supply. Coming to the next one, a very, very easy provision, very useful provision for our clients, stating that if the value of supply is less than 200 and the recipient is unregistered and he does not require such an invoice, we need not issue invoice separately to that customer. So if there is a supermarket and various people, various unregistered persons are coming to the shop and purchasing various goods, which may be valuing less than 200. So if the recipient is unregistered, value is less than 200, and if the recipient is not asking for an invoice, the supplier has an option to consolidate such invoices at the end of each day and no need to issue invoice separately. But we need to remember that this consolidation should be done at the end of each day. Now, what happens in case of cinema screens? Again, as I told you, Rule 46 read with Rule 54 requires multiplex cinema screens to issue electronic ticket even if value is less than 200. So therefore, this consolidation option is not available to a person who's into multiplex cinema screens. So very specific to multiplex cinema screens, as I suggested, this is only applicable to multiplex, not to a single screen. Coming to bill of supply, we know that where the transaction is exempted from GST, we need not issue a tax invoice, but in lieu of tax invoice, we are required to issue bill of supply. And also, we know that composition dealers, whether registered under 10.1 or 10.2A, whether for manufacturing, whether for restaurant services, whether as a trader, whether as a service provider, at concessional rate, they are not eligible to collect tax from the customer. Neither they are allowed input tax credit. So, since they are not eligible to collect tax from the customer, they are required to issue bill of supply and not tax invoice. So bill of supply can be issued only in two cases. Only in two cases. I've seen certain transactions where it is taxable under reverse charge and suppliers are issuing bill of supply. That is not allowed. Even for reverse charge transactions, we are required to issue tax invoice and not bill of supply. So bill of supply is only in two cases. One, where the transaction is exempted from GST. And second one, if the supplier is registered under composition scheme. So we know that as per Rule 5, if you are registered under composition scheme, you have to state in your state in your bill of supply that you are ineligible to collect tax. You are a composition dealer, not eligible to collect tax from the customer. These words should be used in the bill of supply. We all know that petroleum products are outside the scope of GST. So they are not required to issue tax invoice, obviously. So therefore, for the purpose of GST, whatever invoice are issued by them shall be deemed as bill of supply. So they are not required to issue separate documents for the purpose of GST. So whatever documents are issued by them under the relevant act shall be deemed as bill of supply in GST. Now what happens if it is a combination of taxable product as well as exempted product? I am selling a taxable product as well as an exempted product to a customer who is unregistered. Am I required to issue two documents, or will one document be enough? So the Rule 46A explains that if the supplier is registered and recipient is unregistered, mind you please, it will be applicable only if the recipient is unregistered, and the supplier is supplying taxable as well as exempted goods or services together. A single document is enough. That is called as invoice cum bill of supply. So if supplier is registered, recipient is unregistered, and taxable as well as exempted goods are provided together, only one document, invoice cum bill of supply, shall be applicable. No need to issue two different documents. Next topic, another important area of discussion, which is about receipt voucher and refund voucher. If we are receiving advance before supplying goods or services, we are required to, the person receiving advance is required to issue a document called receipt voucher. Now, why is this required? We all know that in case of time of supply of services, even if we are receiving advance before supplying services, we are liable to pay GST on advances also for services. And we know that invoice is normally issued after completion of service. So thereby, since the service is not completed, we have just received the payment in advance. So the person receiving advance is liable to generate a document called receipt voucher. And in case of services, at the time of receipt of advance, if we are not aware of what is the tax rate applicable on such advance and which is the tax to be deposited at the time of receipt of advance, the government has provided that we need to pay 18% IGST. So at the time of receipt of advance for services to be provided later on, if we are not able to ascertain what is the tax rate applicable and what will be the nature of supply, we have to assume 18% IGST. But practically there's an issue here, because we know that if it is an interstate transaction, place of supply becomes mandatory. Now we are already not aware whether it is intra or inter. That is why government has told us to assume it as interstate. Okay, but what will be the place of supply? So this is an issue practically which has no solutions as of now. So what we can do is, at the time of receipt of advance, we generate a receipt voucher, pay 18% IGST using some place of supply, assuming the most possible chances, whichever is possible, you have to assume and pay using the place of supply. In case there is a difference in place of supply, we will have to cancel that receipt voucher using refund voucher and generate another receipt voucher. So this is the only solution which we have now. Or else, at the time of receipt of advance, we can issue invoice. If the transaction is cancelled, we can issue a credit note, or If the transaction has a change in place of supply, again, we can issue credit note and issue another invoice. So if the transaction is getting cancelled, we are required to issue refund voucher if receipt voucher was issued earlier. And we are required to issue credit note if invoice was issued earlier. So for credit note and debit note, invoice should have been issued earlier. Refund voucher will come into play only when receipt voucher was issued earlier. I hope that is clear. Another important area, payment voucher. Payment voucher is to be generated by the person making the payment, that is the recipient, when the transaction attracts reverse charge. Practically, major people are not generating payment voucher, but I request all members to guide the clients, asking them to generate payment voucher at the time of making payment to the suppliers where transaction attracts reverse charge. And payment vouchers, we need to keep separate serial numbers than the normal payment vouchers which are done under forward charge. Normal payment vouchers, when we make payments under forward charge, we generate payment vouchers. That is not relevant for GST, but accounting purpose. But for GST purpose, only for reverse charge payment voucher is applicable. And we need to generate that. A very new amendment regarding self-generated invoice. It has been made applicable from 1st November 2024. If the supplier is a registered person and the recipient is also a registered person and the transaction is attracting RCM, we know that supplier will still continue to raise invoice. So there is no problem. The normal time limit given under section 31 will attract and under rule 47. But what is the change which has taken place? What happens when the supplier is unregistered, recipient is registered, transaction attracts RCM? Very, very important. In such a case, supplier does not issue an invoice. Therefore, the recipient has to self-generate invoice under section 31(3)(f). So, the recipient has to self-generate invoice in case of RCM, where the supplier is unregistered, in order to pay tax and in order to claim input tax credit of the same. We know that tax paid under reverse charge can be claimed as input tax credit as per Rule 36 of Rule 1. We also have to see that it should be obviously subject to section 16 and 17 of CGST Act. So the question arises, this was already there. What is the amendment then? There was no time limit. There was no time limit set for self-generation of invoices. So therefore, Rule 47A was introduced on 1st November 2024, asking the recipients to self-generate invoice within 30 days of receiving the goods or services. Very important. Within 30 days of receiving goods or services, the recipient is liable to self-generate invoice. Now, here comes the twist. Earlier, in case of e-invoicing, we learned that if the government department is registered only for purpose of TDS, we were treating them still as registered person. However, here the opposite has been taken. A government department which is registered only for the purpose of TDS shall be treated as unregistered person in this section. So if there is a government department registered only for purpose of TDS and it is providing some goods or services to a registered person which is attracting RCM, recipient will have to self-generate invoice. So this explanation has been inserted to 31(3)(f), read with Rule 47A, dated 1/11/24. Repeating the same, being important. If the supplier is a government department registered only for purpose of TDS, and it is supplying some goods or services to a recipient under reverse charge, supplier government department shall be treated as unregistered, and thereby recipient has to self-generate invoice. Moving further, before this time limit was introduced, there was a clarification from the department. It was for the purpose of claiming ITC in case of RCM transactions. I would like the members to go through this circular number, but the issue is, can we take this circular in our favor after the time limit has been introduced? This circular, which was there, was brought in before 1/11/24. So after the time limit has been issued, I guess this might not be helpful for availing input tax credit. Now, in case of exports, are we required to generate invoice in case of exports? Yes, because it is a normal sale. Even though it is zero rated, it is a normal sale involving movement of goods. So therefore, as per section 31, as per our first slide, we are required to issue invoice at the time of removal of goods from supplier's place of business. So even for exports, we are required to generate invoice at the time of removal of goods from supplier's place of business. Now, what extra information are we required to state in the invoice if it is a export transaction? If we are making payment of IGST and exporting the same, then we are required to state that such export is being happening based on payment of IGST. Whereas if we have filed LUT or a bond and we are exporting the goods without payment of tax, then such sentence that it is being exported without payment of tax using LUT, that statement is required to be provided in the top of invoice. So Rule 46 mandates the declaration whether it is with payment of tax or without payment of tax. It should be shown on the invoice in case of exports. We know that in case of normal B2C transaction, as we discussed earlier, we are required to show the name and address of the recipient and the address of delivery of the recipient only if the value of supply was more than 50,000. But in case of exports, this option is not available. Very important. If we are exporting goods, name and address of the recipient and address of delivery, which is outside India, the country of destination, is mandatorily required. There is no option of 50,000. There is no option of 50,000 here. So even if the export value is less than 50,000, we are required to show the name and address of the recipient and country of destination mandatorily. One very important practical problem which we are going to face, or which we are already facing, is transactions relating to SEZ. When I am filing GSTR1 and if my recipient is a person located in SEZ, once I enter the SEZ number, it automatically will shift to zero rated supplies in my GSTR 3B. So in my GSTR 3B, in my table 3.1.B, zero rated supplies, it will automatically be auto-populated as zero rated, even if I'm supplying to SEZ. Now, what is the problem in that? there was an amendment in section 16 of IGST Act stating that only if it is coming under the definition of authorized operations will that transaction be treated as zero rated supply. Repeating, I am a supplier of goods in domestic tariff area. I am supplying goods or services to a person in SEZ. This will become zero rated supply only if it comes under the definition of authorized operations. Earlier, it was not there. Earlier, all supply of goods or services to SEZ unit or developer was treated as zero rated, irrespective of whether it is for authorized operations or not for authorized operations. But amendment in section 16 of IGST Act has made it little difficult for us. So all supplies directly to SEZ need not be zero rated supplies, but the portal will automatically lead you to zero rated supplies. So what is the solution to this? Let us understand. I have shown GSTR 3B table here, table 3.1, A and B. Members may kindly note, if I am putting GST number of a SEZ, automatically it will be reported in 3.1.B as outward taxable supplies which are zero rated. Now, what we have to understand, if it is not coming under the definition of authorized operations, it will be a normal interstate supply liable to GST and it is not a zero rated supply. Portal will directly lead you to 3.1.B. But what we are required to do, we are required to remove that figure from 3.1.B and we have to add it in the normal sale 3.1.A if the transaction is not coming under the definition of authorized operations. As of now, we can physically change it, manually change it, no problem. But in case, as we know, hard locking of GSTR 3B might be applicable soon. In that case, we are yet to get a clarification from the government as to what is the solution to this. So if there is any supply to SEZ and if it is not coming under the definition of authorized operation, members may please note that we have to manually change it from 3.1.B to 3.1.A and we are liable to pay tax on it. It cannot be treated as zero rated supply. As of now, it is possible. We are yet to get clarification as to what will happen in case of hard locking of GSTR 3. Next, another very much relevant topic of invoicing in case of ECO coming under 9 subsection 5. In case of Ola, Uber, in case of Urban Clap, Urban Company, in case of Oyo Rooms, in case of Swiggy, Zomato, we know that majority transactions come under 9 subsection 5 of CGST Act. So, if the electronic commerce operator is notified under 9 subsection 5, which are those cases? There are 5 cases, 5, only 5 services. Please note this is not applicable to goods. So Amazon, Flipkart, or any services not notified under 9.5 will not come under this provision. I'm talking only in case of 5 notified services by the government. Which are those? First one, if the electronic commerce operator is providing services of transportation of passengers by radio taxi, motor cab, maxi cab, motorcycle, or any other motor vehicle other than omnibus, then Ola, Uber, or Rapido, or what the electronic commerce operator will be liable to pay tax and not the supplier. Second case, if passenger transport services is provided through omnibus and the supplier is not a company, then electronic commerce operator shall be liable to pay tax. If it is a hotel room providing accommodation services and the hotel is unregistered in GST, then electronic commerce operator shall be liable to pay tax on behalf of supplier. Fourth case is services of housekeeping, cleaning, plumbing work, carpentry works, like urban companies. If the supplier is unregistered, the liability to pay tax shifts directly to the electronic commerce operator. And the major one and very, very regularly used, restaurant services. Whether the supplier of restaurant services is registered or whether the supplier of restaurant services unregistered. It is a different concept here. Even if the restaurant is registered, even if the restaurant is not registered, liability to pay tax in case of services provided through ECO will continue in the hands of ECO. Only in case of five-star hotels or where room rent exceeds 7,500 per day and a restaurant is situated inside that hotel, only in that case the supplier needs to pay tax. In all other cases, Swiggy, Zomato, or the electronic commerce operator will be liable to pay tax in case of restaurant services. So the question comes, who is required to generate invoice and how? The answer is electronic commerce operator shall be deemed as the supplier and shall be liable to generate invoice on behalf of supplier. Repeating the same. In case of the notified 5 services, where the electronic commerce operator needs to pay tax on behalf of supplier, the electronic commerce operator shall be deemed as the supplier and shall be liable to pay tax. And therefore, electronic commerce operator needs to generate invoice on behalf of the supplier. Okay, let me summarize this restaurant services in one line. Even if the restaurant is registered, even if the restaurant is unregistered, the electronic commerce operator Swiggy, Zomato will have to generate invoice for the transactions which are happening through such electronic commerce operator. Please note, only for restaurant services. If Swiggy, Zomato is also providing various other services or supply of goods also through Instamart, etc., that does not come under 9.5. So therefore, that will be separately billed by the supplier and not by the electronic commerce operator. Restaurant service is different and supply of goods is separate. Even though it is on the same portal, only for restaurant portion, ECO will be liable to generate invoice. Any other goods, any other services not coming under 9.5, supplier shall generate invoice and not electronic commerce operator. Electronic commerce operator shall be liable only to collect TCS in such cases. How is reporting done in case of 9 subsection 5 in GSTR 3B? Let us understand. In table 3.1.1, we can see that there are 2 options available. First one is where taxable supplies on which electronic commerce operator pays tax under 9.5. This is to be furnished by Swiggy, Zomato, Ola, Uber, etc., where they are liable to pay GST on behalf of supplier. So they will put the taxable value and they will put IGST, CGST, SGST, whichever is applicable, and they are required to pay. So if you are submitting GSTR 3B on behalf of ECO, we are required to fill this table 3.1.1 first one. Looking from the supplier's viewpoint, Example, you are the restaurant owner and you are supplying food through electronic commerce operator. Then you are required to report your sales in 3.1.1 subpoint number 2. And you are not required to pay any tax because the electronic commerce operator will be deemed as supplier and they will pay tax. So we are just required to report our sales, but not required to pay any tax on it. Coming to the next one, in case of bill to ship to model, we know that in case of bill to ship to model, in normally we have two transactions involved. So I am supplying or transporting goods to a person on direction of a third person. A is supplying goods to B on the directions of C. So here we have two transactions. One is between A and C. Second one is between C and B. So movement is happening only once, but there are two sale transactions which are happening. So therefore, we are required to generate two invoices. The question arises, what about e-way bill? Are we required to generate two e-way bills or are we required to generate only one e-way bill? There was a press release which was issued by the department in 2018, I guess on 23rd April. If I'm not wrong, if I'm recalling it correctly, on 23rd April 2018, there was a press release issued by department stating that only one e-way bill is required to be generated. Even though two invoices are there, since movement of goods is happening only once in case of bill to ship to model, we are required to generate only one e-way bill. This is a very basic section. We are all aware of this. Only registered persons can collect GST, and that also only when they are authorized to do so. So if you are a registered person under composition scheme, you are not allowed to claim, you are not allowed to collect tax. If you are a person supplying goods under or services under reverse charge, again you are not authorized to collect. And if you are an unregistered person also, you are not authorized to collect tax. But here practically there is an issue. What about composition scheme? If they are selling the product at MRP, can they do so? Because MRP refers to inclusive of tax. And this section prohibits us from collecting tax. So as of now, there is no solution. But since MRP is allowed under other acts, people sell at MRP. But maybe later on we'll get a clarification for this section 32. Coming to our next topic, credit note, very important topic. We know that when invoice has already been issued by the supplier and there is a mistake from the side of the supplier leading to overstatement of invoice. So if there is an overstatement due to wrong value or wrong tax rate or goods being returned by the recipient or the quality is not to the satisfaction of the recipient, all these cases lead to overstatement of invoice. Thereby, we are required to issue credit note. Now, the question is, can we issue credit note in all cases? Answer is no. First question, who's required to issue credit note? In GST, credit note or debit note, both needs to be issued by the supplier. Both needs to be issued by the supplier. For accounting purpose, credit note, debit note may be issued by different persons, but it is not affecting GST at all. Supplier is liable to issue credit note as well as debit note in GST. If it is overstated, if invoice is overstated, issue credit note. If invoice is understated, issue debit note. Both are responsibility of supplier. For accounting purpose, if you are issuing any credit or debit note, that is called financial debit note, financial credit note. It has no effect in GST. Now, since issuing credit note in GST will reduce the liability of the supplier, there is a time limit of 30th November after the end of financial year or date of filing annual return, whichever is earlier. So, if we are declaring any credit note, we have to declare the same by this time limit. Whereas in case of debit note, liability of the supplier is increasing and thereby government has no issue. So therefore, there is no time limit for issuing debit note in GST. Can we issue one or more credit notes? Answer is yes. There is no compulsion that you can issue only one credit note or we cannot issue consolidated credit note. There is no issue. If we are issuing consolidated credit note also, we are just required to state the invoice numbers in the credit note. But we have to keep in mind that we cannot bunch various financial years. So if there is a change in financial years, you cannot issue a consolidated credit note. You have to do it separate. However, if it is within a financial year, there is no problem in issuing credit note. Now, what if it is a secondary discount? What do we mean by secondary discount? The supply has taken place between supplier and recipient. There was no agreement. There was no agreement of providing discount, and the discount was provided after the sale took place. In such cases, we are not allowed to issue credit note in GST. But however, since the original discount has been provided, for accounting purpose, we are required to issue financial credit note. But as I said earlier, financial credit note will not affect any liability in GST. Thereby, it is not required to be reported in GST. Only credit notes issued for the purpose of GST are required to be declared. So any financial or commercial credit note need not be reported in the GSTR 1 or 3B, and it will not have any effect on the supplier or the recipient. So post-supply discounts, this is a various gray area where people get confused. For post-supply discounts, we can reduce or we can issue credit note only if three conditions are satisfied. One, that agreement should have been existed at the time of supply. It should be linked to the invoice, and excess ITC availed by the recipient should have been reversed. So using IMS portal, this is possible nowadays. So therefore, only in such cases we can issue GST credit note. If any of the condition is not satisfied, we can issue only financial credit note, but will not affect the liability of GST. This circular will help you to understand how returns are done in case of medicines, time barred or expired medicines. I would really urge respected members to go through this circular, and this will be very, very much helpful. 72/46/2018. I've just included the number here so that you can give a detailed reading. Please do go through this. There are two different ways given on how to issue credit notes or how to treat it as a fresh supply in case of time barred medicines. So very specific sector, but obviously this can be used for other sectors also, is my view. Coming to debit notes, we have already discussed whenever invoice is understated, the supplier is required to issue debit note. And the year in which debit note is issued will be taken for calculating input tax credit time limit for the recipient. So based on debit note, the recipient can claim ITC. As we had discussed in the earlier slides, Rule 54 applies to 4 people, special cases where some special documents or special details are required inside the invoice, which is applicable for insurance company, banking company, GTA, cinema, multiplex screens, and passenger transport services. This we have already discussed. Very important. Coming to delivery challan, where invoice cannot be issued at the time of removal of goods, we are required to generate delivery challan and send the goods based on delivery challan. So, for example, goods are sent for job work. Supply has not taken place. Invoice cannot be issued. Sales returns. Goods are being returned. Or branch transfers happening between the same PAN holder in the same state, but not distinct person. It is not treated as supply. But goods are moving from one place to another. In case of goods sent on approval basis, supply has not taken place. Invoice cannot be issued. Therefore, in such cases where goods are moving without invoice, we are required to generate delivery challan in triplicate copy, and we are also required, very important, we are also required to generate e-way bill if the value of goods is greater than 50,000. So therefore, delivery challan plus e-way bill will be required even if there is no invoice involved. However, in case of interstate supply of principal to job worker, irrespective of amount, we are required to generate delivery challan as well as e-way bill. When goods are sent for job work, we know that supply has not taken place. So we will issue delivery challan and send it to our job workers' place. If we want to further supply, kindly note, if we want to further supply goods from job workers' place, we have to ensure that the job worker is registered in GST. In case the job worker is not registered, the principal has to show it has its additional place of business. If goods are not returned by the job worker within the time limit specified under section 19, read with section 143, it shall be deemed as if the supply had taken place at the time of removal. So, at the expiry of 1 year or at the expiry of 3 years from the date of removal in case of input and capital goods, at the month in which such expiry is happening, we have to report the same as supply and we have to pay tax along with interest. So that is clarified by way of circular number 38 bar 12 bar 2018. This is also another important useful circular for all members. In case of job work, in case the goods are not received back within the time limit specified, we have to report the same as supply in the month in which such expiry is happening, but tax shall be payable along with interest for that 1 year or 3 years, whichever is applicable. So kindly note the circular number 38 bar 12 bar 2018. If goods are sent on SKD, CKD condition or in batch or lots, we are required to generate one invoice. But even though there are more than one movement of goods, goods are being sent on installment basis, we have to generate only one invoice. Now, for each installment, we have to generate delivery challan and e-way bill wherever required. An original invoice shall be sent to the recipient only on the last consignment. That is why if you go through provisions of section 16.2b, the proviso to 16.2b, it states that ITC of goods received in lots or installment shall be available completely only on the receipt of last lot. Proportionate ITC is not allowed. So where goods are sent in lots or installment, ITC is available to the recipient only on the last lot, not on proportionate basis because of this provision. Coming to the last one, in case of transfer of artwork by artist. An artist has done the painting. He is sending this goods or sending this painting to the art gallery. Now, can we treat it as supply? Answer is no, because consideration has not been received. There is no supply which has happened. Supply will take place only when the painting is accepted by any of the customer. So therefore, when the artist is transferring this painting from his place to the art gallery, it will be treated as sent on approval basis. Therefore, we have to send the goods based on delivery challan. Invoices to be issued only at the time of acceptance or 6 months, whichever is earlier. So I hope that this would have been useful. Even though there's a lot of discussion to happen, I can understand that some portions may be in gray area. There's a lot of discussion to be done. But I hope this would have been useful. I'll just take 4 or 5 questions, summarize this, and then we will take up any questions from the participants. Let us summarize this. First question. I hope members will be answering this. If goods are sent on approval basis and no acceptance or rejection is done, when is invoice required to be issued by the supplier? The answer will be option A, within 6 months of removal of goods. A chartered accountant is providing audit services to the bank. He shall raise invoice within how many days? In case of normal services, we are required to issue invoice within 30 days of completion of service. Only when the supplier is a bank, they are getting 45 days. So answer will be option D. Mr. A is a registered person in GST, has procured certain goods or services liable to reverse charge from an unregistered person. This is a question of self-invoicing as per the new time limit or the new rule. The time limit to self-generate invoices 30 days from the date of receipt of goods or service. So option A will be the answer. Delivery challan is to be issued in how many copies? Since delivery challan is applicable for goods, we know that it should be provided in triplicate, 3 copies. Original for the consignee, duplicate for the transporter, and triplicate for the consignor. This is a practical issue which we already discussed. If we are receiving advance for services and we don't know how much tax is payable at the time of receipt of advance, we are required to assume that it is a interstate supply and it is attracting 18%. But obviously, as I told you, place of supply still remains a gray area. We don't know which one to select as place of supply. So that is a problem still applicable. Last question. Continuous supply of services. A service can be treated as continuous supply only if it is provided for a period exceeding 3 months. The same is not applicable for continuous supply of goods. So these were the areas which we discussed. We still have certain time. What I'll do is I'll take up some questions which have already been posted by the members. Just a second. Please differentiate between financial credit note and non-financial credit note. Financial credit note is provided. This is a question from Ayush ji. Financial credit note is issued when we cannot issue credit note in GST. In case of secondary discount, we are not allowed to issue credit note in GST. So for accounting purpose, without any adjustment in GST, we are issuing financial credit note only for accounting purpose. It is not to be reported in our portal. It has nothing to do with GST. No adjustment. Requesting you to cover e-invoicing also. That okay, we have already discussed invoicing. Share PPT. Yes, surely PPT will be shared. Is ITC credit available for civil items that are not capitalized? Civil items, if it is a civil structure, it will not be treated as plant and machinery. So according to me, ITC shall be blocked. Uh, if it is not capitalized, then okay. If is original physical copy of invoice still needs to be maintained as a record, or scanned copy will be sufficient, whether done through e-invoicing or normal invoice, please confirm. Is original physical copy of invoice still needs to be maintained as record? Sandeep ji, no, as per section 35, documents can be maintained electronically or physically. So there is no compulsion that it should be physical. Documents can be maintained online or electronic also. So my view is, as per section 35, since it is clearly stated that it can be electronic or physical, we have a choice. Can a single credit note be issued referring to multiple invoices for the rate difference? Sandeep ji, yes. One or more credit notes. But the only thing is it should be in one financial year. The invoices for which you are issuing credit note should be relating to one specific financial year. You cannot club multiple financial years to issue a single credit note. If transporter is submitting invoice on FCM basis, they may seek exemption from invoice option. Venkatesh ji, yes. The GTA is not required to generate invoice, even if it is under FCM. No issues. Not they are exempted. No issues. Normal consignment notice more than enough. Or normal invoice is more than enough. E-invoicing is not required. Varun Kumar ji is asking, what should I do if I have issued an incorrect invoice and 24 hours window for cancellation has already been passed? How can I rectify? Varun ji, you can rectify in GSTR 1. And if you have filed GSTR 1 also, rectify in GSTR 1A or in the next GSTR 1 in the amendment column. If turnover exceeds current financial year, then now invoicing as applicable. Ranjit sir, my view is it will be applicable only from the next year. They are saying that 5 crores should exceed in any previous financial year. So my view is invoicing will be applicable from next year. My view. But we are receiving notices. Okay. In case of revised invoice for unregistered persons, who will bear the tax? Since we have not collected tax from the recipient, we will have to bear that. Jitesh Bajaj sir, my view is if he is a retailer, he would have already sold goods at MRP. So MRP is already inclusive of tax. So even though he was not registered, even though he was not having GST number, he would have collected MRP. So there's no issue in that case. If he's a manufacturer or a wholesaler or a person who has not sold product at MRP, then yes, that is a problem. That is a problem. Whether e-invoicing is needed to be issued by an ISD person if e-invoice is applicable to the entire entity? No. For ISD transactions, it is not applicable. Whether breakup of GST needs to be mentioned for medicine sent by hospital to its branch hospital. Whether GST breakup is needed to be mentioned. Sridhar ji, if it is distinct person, then it is deemed as supply, normal supply. And yes, you will have to separately mention the GST if it is distinct person. If they are having same PAN, same GST number, then it is not a supply. So question of GST does not arise in that case. Only if it is a distinct person, yes, you have to show it separately. An entity procures reverse charge goods from unregistered persons, government organization. The entity tenders for the goods with a deposit. On successful tender, pays the balance amount. DO is issued after a couple of months. Uh, Sabu sir, my question is it deposit? Deposit cannot be treated. If it is refundable, deposit cannot be treated as consideration. It cannot be treated as a payment. Only if it is non-refundable, it will become payment. So if at the beginning itself, if it was non-refundable and it is liable at the time of receipt of payment itself. How to raise invoice in case of supplies made to government department where GST department has only 10 number for TDS deduction. You can provide 10 number, that is enough. No issues. What is the date of applicability of RCM for rented place of business? Akash sir is asking, what is the date of applicability of RCM for rented place of business? I think you are asking from which date for commercial property RCM will apply. If I'm not wrong, it is 10th October 2024. Please do check. I feel it is 10th October 2024. Reverse charge applicability for if the owner is an unregistered person providing commercial property on rent to a registered person will attract RCM from 10/10/24. And if he's under composition scheme, he's not required to pay RCM. That is from 16th January 2025. From 16th January 2025, composition dealers are removed from that RCM applicability. Maltiji is asking if service provider is unregistered. If service receipt has to pay GST on it. Maltiji, if that transaction is coming under RCM, only then recipient has to pay and claim input tax credit. If service provider is unregistered and the transaction is not coming under RCM, applicability of GST is not there. Any option to raise credit note against erroneous invoices? Normal credit note is enough. You can just report it. Is invoicing required in case of self-generated invoice? No. That is for inward supply. As of now, invoices are applicable for outward supplies. If I have received goods or an invoice copy, but supplier is not filing GST, so I am not able to claim ITC. Oh, that is a genuine problem, sir. Manohar ji is saying that I have received goods and invoice copy, but supplier is not filing GST R1, so I'm not able to claim ITC. That is a genuine problem. You have to talk it out with your supplier because there's no other way out, I guess. we are engaging in transmission of electricity. We provide taxable as well as non-taxable services. Is invoicing required to be done for which cases? Amit Bishwas, sir. We engage in transmission of electricity. Amit, sir, according to my understanding, that is exempt supply. For exempt supply, you are not required to generate invoice. If there is any taxable portion, then please do generate for that transaction only. For exempt supply, you have to generate bill of supply, not required to generate invoice. Sabu sir is asking clarification required on whether a registered entity dealing in RCM goods, say scrap, should raise a forward charge invoice. Sabu sir, my understanding is if a RCM in case of scrap will apply only when supplier is an unregistered person and recipient is a registered person. So if supplier is unregistered, recipient is registered, and it is scrap sale, you are required to self-generate invoice. Self-generate invoice for RCM purpose. If supplier is already registered, supplier will generate normal FCM transaction, and you are required to deduct TDS. You are required to deduct TDS under GST also at the rate of 1%. That is also applicable from 10/10/2024 in case of scrap. So if supplier is registered, deduct TDS. If supplier is unregistered, pay tax under reverse charge, self-generate. Composition supply GST paid on receipt and GST not collected from customer. But supply values MRP which includes maximum GST. Why GST is not netted off from supply? Yes, Sridharji, this is the practical problem which everyone is facing. As per section 32, composition dealers should not collect GST. But since MRP is a different act and they are eligible to supply goods at MRP, legally speaking, they are not allowed to do in GST, but as per other acts, it is allowed. So as of now, there is no clarification on the same. The government also has not issued any circular according to my limited knowledge. So that still remains a gray area. Okay. So I guess I've taken up majority questions. I hope this would have been a useful session. Any other questions left, please do notify it in the portal. I will surely try to get back to you on other topics or other left out questions. And before we wind up, I would thank GST committee for providing me this opportunity. Thank respected chairman sir and vice chairman sir and the entire committee, including all the technical staff and all the supporting staff, without which this is not possible. This is a learning for everyone, including me. We are all new to GST. So it is still a learning process. So whatever I've learned a little bit, I was trying to present in front of you. So all thanks to Almighty God, Sri Krishna. Thank you, my Gurudev, being allowing me to be what I am today. I'm all submitting in his lotus feet. So all what I have done is only his. So thank you once again, everyone, for listening to me. And thanks to the committee for arranging such a beautiful program. Thank you very much. Thank you very much.
The pleasure is all ours. Thank you for sharing such valuable information and knowledge, unlocking that knowledge on GST. Thanks to all of the participants. Sanket, we can sign off for today. Yes.
Thank you. Thank you.